Learn how loans work before you borrow. For example, if you have assured an April of 6% on a $13,000 four-year car finance without money down, as well as nothing else costs, compounding monthly, you would certainly pay a total amount of $1,654.66 in interest. Your regular monthly settlements could be greater with four-year financing, however. A 5-year automobile financing will cost you $2,079.59 in interest. After you provide info concerning on your own, the lending institution will certainly evaluate your application, as well as choose whether to provide you with the funding. If you're approved, the lending institution will certainly send funds to you or the entity you're paying if you're purchasing a residence or an auto, for example. The money could be sent to you or directly to the seller. Obtaining a finance. When you intend to obtain money, you check out with a lending institution either online or in person, as well as request funding. Your financial institution or cooperative credit union is a great location to start. You can additionally work with specialized lending institutions, such as mortgage brokers, and also peer-to-peer borrowing solutions. Many individuals use financial debt to fund purchases they would certainly not or else be able to afford, such as an auto or a residence. While loans can be terrific financial tools when they are utilized correctly, they can be excellent foes as well. To keep from taking on too much financial obligation, you must comprehend how financings work and just how cash is produced by the loan providers before you start obtaining money from eager lending institutions. Rate of interest. This is the amount the loan provider is billing you for obtaining money. It's generally a percentage of the amount of the loan and is based upon the rate the federal book bills financial institutions to borrow cash overnight from each other. This is called the government funds price, as well as is the rate financial institutions base their very own rate of interest on. You'll likely also require to reveal that you have sufficient revenue to settle the loan. Lenders will certainly typically consider your debt-to-income ratio, the quantity of cash you have borrowed compared to the quantity you make. Fees. You often need to pay costs on finances. The kinds of costs you could need to pay can vary, depending upon the lender. These are some common types of fees. It is very important to know exactly how fundings work before you obtain money. With a much better understanding of them, you can save cash and make better choices about debt, consisting of when to stay clear of getting more, or just how to use it to your benefit. If you do not have solid debt, or if you're borrowing a lot of money, you might additionally need to protect the funding with collateral, otherwise called a protected car loan. If you're unable to settle the financing, this allows the loan provider to take something and also offer it. You may also require to have a person with good credit scores co-sign on the car loan, which implies they take responsibility to pay it if you can't. It's best to look for car loans with low rates of interest and also no or very little fees. Exactly how do I discover my monthly settlement on finance? If your lending institution mails them, your month-to-month settlement quantity and also due day will be on your lending agreement and also in any monthly declarations. You most likely can additionally develop an on the internet account with your lender and also examine your payment info online. Costs connected with finances. Understanding any costs related to financing can help you identify which one to select. When authorizing for financing, as well as are generally in legal and economic terms that can be complicated, prices are not always promoted upfront. Quickly after getting the financing, you'll begin to settle the funding on an agreed-upon recurring date, typically once a month, with a predetermined rate of interest. Principal. This is the initial amount of cash that you're borrowing from a loan provider, as well as agreeing to repay. Your credit report is a crucial factor in helping you qualify, given that it demonstrates how you have used loans in the past. You're most likely to get funding at a practical passion price if you have a higher credit report rating. Watch out for advance fee financing scams. Legitimate lending institutions will never require you to pay a cost to ensure your funding if you have a poor credit score or no debt, or if you have declared bankruptcy. One basic method to compute your loan passion is to increase the principal by the interest rate and durations each year for the finance. However, not all car loans are created by doing this, and you may require to utilize a calculator for funding amortization or an interest rate to figure out how much you will end up paying over the term of the lending. Trick financing components. Before you borrow, it's smart to come to be familiar with some essential terms that are related to all sorts of fundings. These terms are major, rate of interest, and also term. Amortization is the term utilized for exactly how money is applied to your financing principal, as well as the rate of interest balance. You pay a fixed quantity every period, however, the quantity is split in a different way between primary and interest for every repayment, relying on the loan terms. With each repayment, your passion costs per settlement drop gradually. Finances allow the organization in the economic globe. They are utilized to make money for the lenders. No lending institution intends to lend somebody money without the assurance of something in return. Keep that in mind as you study finances for yourself or a business. The way financings are structured can be complicated and also create large amounts of financial debt. Term. This is the amount of time that the lending lasts. You must pay the money back within this specific time frame. Different sorts of loans have various terms. Charge cards are considered revolving finances, so you can obtain and pay off a lot of times as you want without obtaining new lending. Can I alter my lending settlement? As long as your loan doesn't have an early reward charge, you can always raise your payment total to pay off your loan sooner. If you intend to pay a smaller regular monthly repayment, you'll probably require to refinance your funding to a smaller sized quantity or longer payoff term. The amortization table reveals an instance of how a monthly settlement is put on primary interest. Interest expenses. When you obtain, you need to repay the quantity you obtained plus interest, which is generally spread over the regard to the financing. You can obtain a lending for the same major amount from different lending institutions, but if the rates of interest and/or terms differ, you'll be paying various quantities of complete interest. In many cases, loan providers will restrict exactly how you can use funds. See to it you recognize any type of restrictions on how you make use of the obtained money so that you won't get into lawful trouble. Getting approved for a car loan. To get the financing, you'll have to certify. When they think they'll be settled, lenders just make finances. There are a couple of factors that lenders use to figure out whether you are eligible for finance or not. Several prices are based upon the federal funds rate, such as the prime rate, which is a reduced rate scheduled for the most creditworthy debtors, like companies. The medium, as well as high rates, are after that provided to those with more risk to the lending institution, such as smaller-sized organizations, as well as customers with varying credit ratings. The expenses to a debtor can be extremely deceiving when prices are thought about. The annual percentage rate, April, of lending is most famously promoted by financial institutions because it does not make up a worsening rate of interest that is paid over several periods. Just how do you pay back financing? Your lending contract will certainly have information regarding exactly how to repay your finance, as well as the exact arrangement that relies on what sort of loan and also terms you have. Normally, you'll make a payment by a set-up due day each month. You can generally establish it up as an automated draft or mail a check to your lending institution every month. If your financing allows it, you can additionally make extra repayments toward the principal to pay it off earlier. Application charge pays for the procedure of approving finance. Processing cost, comparable to an application fee, this covers costs related to providing lending. Origination cost, the cost of securing a car loan, most typical for mortgages. Yearly cost, an annual flat cost you have to pay to the loan provider, most usual for credit cards. Late charge, what are the lender fees for late repayments? Early repayment fee, the price of paying to lend off very early, most common for home and also auto loans. Lenders count on loans for passion income. When you pay your financing off early, they lose the amount of income for the number of years you will not be paying. The prepayment charge is developed to compensate them for not obtaining all the passion income they would have made if you hadn't paid it off. Not all lendings included these charges, but you must watch out for them and also inquire about them when taking into consideration a car loan.